afternoon. My name is Scott Forcino. I'm an associate broker with eXp Realty. I'm the founder of PlugIntro, which was designed to solve our problems that we usually don't have enough people to speak to, and we don't have enough value for them outside of our transactions. I have with them someone I really respect greatly, David Mizrahi. He's a lender with FM Home Loans, done a great job with clients and with people I know, very great reputation. I think he's a cool guy too. So David, welcome us today to this afternoon opportunity for a video interview.
Thanks for having me. Looking forward.
Yeah, it's fun. So what we're dealing with now is because it's early May. I want to discuss with you as a local pro all the differences and the changes in the rates and the programs and buying houses and the challenges with agents and clients and buyers and even sellers, because where are they going?
Right.
So give me an idea of what you're doing on a daily basis, how things have shifted and what you do.
Yeah, I mean, in today's market, the market's shifting pretty much daily. I mean, what I've been doing over the last few weeks have been reaching out to my past pre-approvals because unfortunately, you know, what they were pre-approved for 2 months ago or 3 months ago, or even last week, in some cases, they're not, the number has changed because, you know, unfortunately, we're in a rising interest rate market. And when the interest rates go up, so does the mortgage payments, but that also unfortunately brings down the purchasing power of what they could feel comfortable with. Because, you know, all banks look at, you know, what you're pre-approved for, but one thing that I look at and pay attention to mostly is affordability and comfortability and quality of life.
That makes sense, because your dinners and your school plays and your weekends away are not considered when applying for a loan.
Correct. And I always tell everyone, you know, whatever you used to do before you own a home, you should pretty much do it, you know, after. Now, listen, if you go for dinner 10 times a month, and then you purchase a home and you switch to 6 times, I don't, you know, I think that's okay. But at the end of the day, I don't want you to go from 10 to 0 and just living just to have that roof over your head, because that, you know, it's not a real, it's not something you could enjoy. And, you know, real estate is the best thing in the world. And everyone knows my saying, if you take care of your real estate now, we'll take care of you in the future, but you still have to live in the present, which is important.
Right. Well, you hit on a good point that really is the new conversation now. Before, it was just low rates and qualifying and closing. Now, I mean, you mentioned people who are pre-qualified, but what about people in contract? What about that?
Yeah, I mean, I'm hoping that they're locking in their rates. You know, that's something that we've been doing right away these days. I just don't trust the market, the interest rate market. I don't trust any of the markets, actually. You know, so I don't want to gamble on my clients' mortgage payments. So I usually say, you know, once you go into contract, let's find out when the seller's looking to close, and let's take a lock in for that period in that time frame so that we can make sure that we protect you. And if the rates go up, you're protected.
For how long is that lock-in period?
It could be for any amount of times. I mean, you know, it could be for 30 days, 45, it could be for 60. You could even stretch out longer if need be. But as you know, the longer you stretch out a rate, it could raise the rate a little bit for a lock, because of the lock-in period, because the banks are hedging.
I understand. So I know a friend of mine, he in Florida, he surprised me by telling me he only paid $100 a day to extend the lock-in period. Does that sound right?
So it really depends on the loan amount and the investor you're working with. So they have different criteria or different agreements. Some banks charge 1/8 of a point for every 7 days, or 1/4 of a point for 15 days. Some charge more. I mean, some banks right now actually are not extending rates. There are a couple of banks out there that says once your rate goes, you need to lock in at current market rates. There was a couple of emails that went out just over the last week or two about that from other banks. So you know, it's bank to bank, but you know, we definitely allow extensions here.
That's a big thing. I would think that, you know, and we're going to talk about referrals in a minute, where we can't expect a home buyer to be that savvy of such a really esoteric topic such as that. But I mean, I would think that that's a great reason to work with you, just so your clients know that that rate, if they were to secure it, is safe.
Yeah, it's important because I've heard from so many people, unfortunately, not, you know, from a handful of people, where they were in contract and the buyer ended up not qualifying or not going through with it because they spoke with their bank and they told them 3.5%. And then a month later, they told them, oh, I'm sorry, the rates are now in the high fours and their mortgage payment went up a few $100 and they're already stretching it where they were before. So, because of that, the banks, I guess, lack of locking the loan, it ended up hurting the deal for the client, for the seller, for the realtors, for everybody.
This conversation I find funny because lock-in was a heavy subject when I was closing loans for banks like crazy, and then the subject died because rates were so good for so long. Am I right?
Right.
No one said lock-in.
Yeah, because the rates were on this type of trajectory over the last couple of years, and there was no point of locking in a rate when you knew that today the rate could be 4.5 and tomorrow it could be 4.25, or even it wasn't a rising rate market where the rates were pretty much going down or staying flat. So there was no real risk to lock because I was having clients where I was quoting, they're saying, okay, we're locking in 60, we're closing in 60 days. And I would tell them, okay, if you want to lock, here's the rate for 60 days. And then they were, agreeing to let it float because there were no risk in the market for letting the rates go up. And then we ended up locking in for 15 days with a better interest rate, and giving them a credit or something because we were at a 15-day lock. So it really depends on the market. I mean, I would never do that in today's market. I don't gamble, and if I go to Atlantic City, I don't gamble. And so I definitely wouldn't gamble with my clients' money.
Interesting. I got to tell you, I think between clients and even real estate brokers, there's so much nuanced knowledge here, and the delivery is so important that I really juxtapose that against people doing online lending where there's none of that. No one on an 800 number is going to have the interest or the wherewithal to discuss that topic.
I agree. I mean, look at better.com. I mean, they're literally focused only on internet. I mean, their whole thing was, we'll do everything all on the internet. We'll give you the best interest rate. Now, in the beginning, they were giving awesome interest rates, but if you look, I mean, they were closing in forever. They were having so many issues. They laid off, I think, 50-60% of the company over the last 90 days. And there was a lot of issues with a lot of these type of companies. In the mortgage industry and the real estate industry, there was never a class in high school or college or grad school or med school or law school to teach someone how to purchase a home or get a mortgage. So,
right.
It's crazy, but you go through all these schools, all this schooling, spend hundreds of thousands of dollars, and they teach you about everything that you need to know besides the most important topic out there, in my opinion, the roof over your head and your family. So,
right.
that's one of the things that why I do a lot of first-time homebuyer webinars, because I'm educating people on what they need to look out for, the CIA, credit, income, assets, what kind of credit scores they need to be. A lot of people just think that if they have a 660 credit score, they qualify for a mortgage. I mean, you could have a lower credit score, but you do qualify at that rate, but with that score, but unfortunately, maybe not the best interest rate. So if we can help you and educate you on the importance of a credit score, and then you can go and pay attention of what you can do with some insight and some education of how to bring up the credit scores, then automatically the scores will go up, the interest rate will go down, you'll save yourself a lot of money on credit cards, auto loans, student loans, things like that. And then, assets, money they need for their down payment, closing costs, reserves, just money set aside, because I have so many people call me up and say, okay, I'm ready to buy a home. I have my 3%, 3.5%, the minimum I need to qualify. I say, great. That sounds great. So, we have the down payment and then the closing cost. What's that?
Right.
And now they didn't embrace for any of that money. So they have the down payment money, but unfortunately they're not ready because they don't have the closing cost. And in today's market, it's very difficult to get a seller's concession, especially a seller's concession for all the closing costs. So, that is something where you need to be ready before you're ready, because when you're ready, you want to make sure that you get the best of the best. Because if you say I'm ready today, but you didn't look at your credit 6 months ago and there was a medical collection, on it for $50 and your scores were 650 because of that medical collection, if you would have had the time to fix it, now you would have gotten a much higher credit score. And when you call us or any bank, they would give you a much better interest rate on anything you buy.
That's true. And I wonder, just what you mentioned, seller's concession, and I wondered if that's going to really come back in favor. It seems like it almost has to, if you can get an appraisal based on that.
Yeah, I mean, the market will always shift. Rates go up, market, economy changes. Unfortunately, people sometimes are in need to sell, and honestly, a seller's concession sometimes is not a lot of people look at it as a negative thing. I actually look at it as a positive thing, because if you could offer a seller's concession while you're selling a home and you're the listing agent, how many more buyers are going to come through that door?
I completely agree. I've done it. I've done that.
Yeah.
In fact, one more thing that I think is, I've been in a national conversation, and you tell me what you think about this. Instead of chopping $25,000 off a price, which happens every day all over the place, why not give that to the buyer for closing costs or specifically for points on a loan? That would be the most attractive thing I think you could do.
So I actually just did that. I mean, I had a client who's purchasing a property for 950,000 in New Jersey. It was a new construction. It ended up coming in. I mean, very rare, but it came in for 100,000, 110,000 over to be exact. When he was doing he was telling the builder, basically, I want this, I want all these upgrades. It cost him an extra $40,000 out of his pocket. So basically, what he ended up doing was raising the purchase price up to pay the closing costs. So now that $40,000 didn't really come out to 40,000. It really almost costed him 20,000 because just raising his purchase price $20,000 was only about $90 to $100 a month, and for him that was very affordable. I'd rather have 20,000 in my pocket and a payment of $100 more a month.
Yeah, I think that's it will result in the same dollar for dollar for a seller, but if you want to stand out to buyers, I mean, I have wondered if I could do this, almost quote. Imagine this, quoting a mortgage interest rate. I know a seller can't give that, but to say that the possibility, if today it's 5.5, and you know that 3%, 3 points would buy. I'm saying ballpark. What would that knock it down? Would it knock it down 1% or 0.5%?
So in today's market, I would say, the first point will get you about a quarter. After that, it's not really going to help you so much because there's not so much yield in the market. So basically what I would say is, yes, I mean, prior to this, yes, you could pay 3 points, 2 points. You'll be knocking off a half a point, 3 points, maybe a little bit more. But yes, so for sure. I mean, you could definitely tell the buyer, I'll help you bring the interest rates down a quarter of a point to when the current market is, with using a seller's concession method or something like that. I've seen it happen so many times. I had
Well,
an
I don't
agent.
even need a seller's concession because then you're dependent upon an appraisal. I'm just talking about just donating it. Why not give it to the buyer if you're going to do a price reduction?
Well, it has to go in the form of a seller's concession.
Oh, it does?
Yeah, you would have to be put as a form. They won't let it be underway. It has to be part of.
I hear you. It's not a contribution. I mean, it can. That's a distinction. Okay, it has to be part of it. But is that appraisal contingent then?
No, the appraisal won't be contingent on anything. The appraisal is going to be based off of the price. They don't, and then basically the contract will just put in how much is going to be used from the proceeds to the buyer's expenses.
Okay. Well, I think that's an idea that's really time to come. I'm thinking that's going to be a way, and that one thing might be a message for you to offer to agents alone, where that's an idea.
It's something that definitely works. I mean, you don't even have to give it. You could write in the listing. It's we would consider up to 3 points or 3% of the seller's concession. Now, at the end of the day, that's up to, and it's consider. So you put those two words in there. If someone comes in and you're trying to sell the house for 550 and you're going to offer that, but someone comes in at 550 and say, I don't need any of that, then that's fine. Then it works out for you because you're creating that negotiation and that bidding war. Because generally, buyers, when they're ready to buy, they already have. I mean, unless they, as long as they've been pre-approved, they already have the down payment. They already have the closing costs, so they're already ready. But now, if they can get it, it's a plus. If they can't, it's okay. I got the house.
I think we're in a declining asking price market, or at least if not now, will be maybe right in the middle to the end of the summer. What are your thoughts on that?
Yeah, I mean, right now, I think the demand is up a little bit because of the spring, summer that always brings out a lot of people. I do agree that probably after the summer, there will be a slowdown. Just how it always is, the holiday starts, schooling starts, and a lot of things happen. It gets cold. So I think that will be something that will happen. And I think right now it's really important to make sure that you, as an agent or a loan officer, that you have all the tools that you need, you have all the programs that you need, because at the end of the day, when the market is not as the volume dries up a little bit, then at least then you'll be able to still pick up the business that you need so that you could still survive and thrive, probably even in a downward market. And then when the market turns, it should only be better for you.
Yeah. One of the things that I'm hearing on these interviews with lenders across the country is how fast this happened. It was like from what someone said to me, oh, the rates went to 5. I go, today? What, 2+ weeks ago? Remember what I said? Today? And I hadn't seen that in how many years, maybe ever.
Ever. Yeah, no, this was, between Ukraine and Russia, the market, a million other things, liquidity drying up, the government's taking a step back with the buying of the bonds, the Fed coming in and raising the rates. I mean, it was just a perfect recipe for a disaster for interest rates. I mean, to be honest with you, it's been a long time coming. It should have happened, in my opinion, a year and a half ago. But of course, the Fed dropped the ball again, but now we're in this mess because unfortunately they kicked the can down the road for too long, and they should have maybe kicked it a little bit less times.
I think they were reluctant to do anything as cities were closed down with COVID and commerce wasn't there. You think that's the reason?
I was looking at it this way. Everyone was closing down, but the economy was never so strong in the world. In my opinion, it was just basically the news media just dictating the conversation and what everyone's thought process was. But if you look at it, the cities were buzzing. Everyone was out. Maybe they had a mask on, but they were out, and they were spending more money than they've ever spent. I mean, a Rolex watch that used to go for 20,000 is now going for 70,000. A car that used to go for 40,000 is going for 70,000. Why? Because everyone bought everything. So there's not a lot left, and then the supply chain was another factor in it, which brought up that between the ships, so just sitting in the ocean for the last 45 days waiting to get unpacked, and then they're sitting on the dock for another 45 days just to go into a truck. I have a lot of friends in the wholesale apparel industry, so I know what they're going through. So it's just a lot of mismanagement, in my opinion. And it's a lot of it's not that it's fluff, but it's something that's very easily, it could be balanced out just by the supply chain working a little quicker. And I feel like that will bring down prices a lot, because if there's more goods on the shelf, prices go down.
Sure, we're in for some different times. But one thing I want to talk about, because I know you personally, I know how heavily networked you are and that you teach agents and work alongside other professionals. I came up with a topic that trust is under attack. You mentioned better.com, and of course we all know Zillow. And if you look at it, all the venture capital and all the Wall Street backing and all the technology is designed to bring the consumer directly to the provider. Zillow brought people agents. You didn't ask your neighbor, although you could. And now these, Quicken and Rocket, and they spend $30 billion on a Super Bowl ad to get people, plus millennials, and not just millennials. Everything you do is on your phone, whether it's Amazon or Fresh Direct or Food or Grubhub or anything. So naturally, people don't want to be sold, so they turn to their phone, where they are on anyway, and try to secure financing. And then what? Like you just described, they don't have that nuance. Plus, New York has lawyers. So that's a whole other world, right? I mean, think about how different New York is compared to agents in Florida or North Carolina writing up an offer.
Yeah, well, agents in Florida really wouldn't use those type of banks, because Florida is, Florida. It's not on or about. You got to close on that date, or else, we're coming after you. But yes, I agree. But those banks don't really work for a lot of markets. But also at the same time, they don't work for a lot of people, because this is an industry where people really need someone to hold their hand. They have so many questions. You can't ask a computer a million questions. Also, I always say real estate, you have to have two hats on. You have to be your client's best friend, right? Because you're dealing with something more personal than anything in their life, the roof over their head. But then you also have to be their financial person. You have to be their business person. Why? Because they're making one of the biggest business decisions. So not only do you have to relate to them on a personal level, they have to trust you on a business level, because else, if you don't have both of those, you're not getting any of it, in my opinion, or you'll get very few. And people want both. They don't want one. They don't want half of one. They don't want to hear, I'm getting a great rate, but I don't know anything about what I'm doing, and I'm sending you systems and things like that. They want to know everything. And it happens all the time, because there's always someone cheaper out there in every industry: toilet paper, real estate, mortgages, but people work with who they want to work with because, especially, you know, and I've had people they got better interest rates by a different quoted a better interest rate. Then all of a sudden I'm like, wait, but you're going an FHA program with the mortgage insurance that's going to stay on the life of loan. I'm going on a conventional loan. The PMI drops off. This is a much better program. You don't have to pay 1.75 like you do to FHA. This will cost you zero. And after they looked at it, they're like, oh, you know, I didn't even put all that into account. I just saw a lower rate, made sense. But that's the problem. They didn't educate you on what that program is. So I always tell my clients, it's not really about the rate. Not that it means nothing, but it's not the most important. The payment is more important than the interest rate, because if you got a low rate and a much higher payment, did you really win? Did you really benefit?
No.
No.
Yeah.
So that's my point. And you know, so I think that in the real estate industry and the mortgage industry, people need someone to be there for them. They have a lot of questions. They're scared. They've only bought a house once. They've never bought a house before. Or even if, you know, I remember when I bought a house and I've closed tens of thousands of mortgages, I was nervous. So I could only imagine how someone is that doesn't deal with this every day for 21 years.
Sure. But when I, you know, did represent myself in purchases and looking at the contract, and I'm thinking, am I missing something? You know, and then you know it's the same physical document you looked at 100 times, but you have to question. You know, everything you're talking about is dealing with the consumer and your client. That makes sense. But I know, as I said before, you're so heavily networked and held in high regard. I know that your business, and on a reciprocal basis, is referral based. And
yeah, it's all referrals, 100%.
And that's great. But, you know, the problem with referrals is, and it's happened to others, I know, it can dry up and there is competition. And really there's, you know, I don't want to speak ill of any of our realtor versus brothers or sisters, but they have been called fickle, to use a nice word. And
very nice word.
A very nice word. There's another word. So we were being recorded and the agents are going to see this, but that means that's why we always have to provide value and staying in touch with them. But even that might be enough. So, you know, one thing I'm happy that I created PlugIntro for myself is that now someone like you who works heavily with agents can provide and co-host and really, really implement a chance for them and you to make a big difference in their local market, tap into the business community and offer value and offer others a place to promote their business. It really is no longer a chase for lenders or title companies or home inspectors to be rejected. We really rely on just an invitation to join a platform. You've invited very many agents here. It's a chance to make an impact on a day-to-day basis. Even you with your greatest referrals sources, if an agent has 10 listings, they're not talking to you. They're talking, they don't have a reason to talk to you. They're dealing only with sellers. And I bet you've lost referrals because people moved away from dealing with buyers and love dealing with sellers. So that person, you have a great relationship. It just naturally evolves. So I think a lender has to provide value other than their services. And I said to someone yesterday, I love this, or someone's repeated back to me, if you're not providing a digital position where someone can gain, then what are you doing? We're stuck with stuff from the 90s. And that's really, I think, that where we're going, because we are using these digital platforms anyway. And video, I mean, there's this video canyon. People are not doing constructive videos that'll last forever and inviting others to participate or share the content.
Yeah, I mean, listen, you have to be in the digital world, you have to be in the personal world, you have to be in every world in order to be successful. You have to have the value add, you have to be in front of them. I mean, in today's world, there's just so much competition out there, but in order to be relevant, you really have to be everything to everyone. You know, one of the things that we try to always be is ahead of the market. You know, right now we came out with a program where if you're buying a home, you have 20% down, you're buying a one-family home with a conventional loan limit, and we qualify you with everything. We'll buy the house cash for you, and you can purchase the home back from us within 30 days at the same purchase price and everything. And it's pretty easy. I know it sounds very, you know, a little bit crazy, but yeah, I mean, in today's market, people are competing with cash offers. So as long as we know the value is at that price.
Let me get my head around that. So that means you apply for a loan, 20% down, you qualify for the remaining loan to value. And if it doesn't happen, FM Loans will somehow buy it?
No. We're not. They're going into knowing that we're buying that property for them because they have to purchase it within a 30-day period. So basically, we're going to be submitting a file to our to our program, which is going to have a delegated underwriter to go and review that file, review their tax returns, W-2s, pay stubs, everything, credit, and approve them. Now, basically, we'll have the address, we'll have everything because they're already in contract, and we'll fund that loan if that right away, and then they'll basically stay in process, and then we'll end up closing it for them, and they basically move into the house right away. Their first payment will, while they're closing on the house, they'll be paying us their rent, which is basically the mortgage payment. And then basically, as long as we do the mortgage for them, there is no charges for them at all.
So all I can say to that is, wow,
yeah, it's a new program. No one has it. It's literally the owner of the bank came up with it himself.
Well, wait a minute. This isn't like my cousin Vinny did anything like this. That sounds so. So the bank funds the purchase, is the title holder, and then there's a subsequent transfer to the borrower once they have their loan fully underwritten.
Correct.
Boy, that's. And what's the point? Just for expediency?
Yeah, just it's for our relationships. It's for our realtor relationships. It's not for a regular Joe Schmo we just met on the street. If you send me a client, I know you for a very long time. You'll sign up for this and become a preferred realtor for this program. You would send a BPO for this property to make sure that we're lending in the right amount. We'll do our own searches. And yeah, that's how we would do it. But if you tell us the property is worth $700,000 and it's worth $600,000, that'll be the last time you do one with us.
I'm sure, but there must be within the underwriting an appraisal.
So sometimes we don't have the appraisal in that this time yet.
Wow, that's revolutionary.
Yeah. Yeah, it's awesome. That's why I couldn't get on with you a little earlier. I was actually kind of training on it.
That's something else. I mean, I would think that that's a great reason for a mortgage loan officer to join your company.
Yes, there's going to be a bunch, in my opinion, because a lot of these banks they haven't changed in the last 20 years. They haven't changed recently. And now that the volume's drying up, if you're not changing with the market, I don't see a reason to stay there.
I would say the refi market's dead.
Unfortunately, that is dead.
That is,
and the cool thing about it is with us is that even when it was the hottest it was ever in the history of this world, we never even paid attention to it. We never cared about it, and the reason is because we're the way that we do business is it's all about relationships. Refinances, they come and we'll do it for them, no problem. We'll give them the better rate, but we're not looking for them. We're looking for the purchase market.
And that's, as we know, that's what a lot of places lived on, and were the refi factories.
Correct. And we loved it. I wanted them to, enjoy it, because at the end of the day, it's not really long term.
No, in fact, I've even heard the opposite. I've heard banks say we're refocusing on the purchase market, and I thought, really? That's what that's crazy that you're. Wow, that's really.
But the problem is those relationships over the last few years have been taken up by other people that were focusing on them.
No doubt. I mean, that's the difference between really. I find that that's not Citibank. This is you folks with Steve, and local and well known and well respected, and really, really coming from a place of contribution and offering value to these these agents. And no one can understand, unless you're in the deal, how stressful this could be on a weekend for people. They make an offer, they're nervous, or they're getting ready to close. People at closings, their heads are spinning. They can't believe it's happening, and then they get the keys. And then, I remember I walked in with my wife, and the house was like the money pit. And she goes, "What do we do?" And I said, "I don't know. We're young enough. We're just going to do it." Needed. I would never do it again. But man, it needed everything. And we said, "What do we?" And then we didn't know that it was freezing because basically the furnace didn't work. So it was August. We got here, and then we're like, "What? We have the heat on. We're freezing." Right?
I've heard that story.
Right. It's almost unfair because young people, they want what's right. They want the tax deduction. They want to start a family. But there's 1,000 things that you could deal with in a house that no one's coming from an apartment where you call the landlord if you find a bug.
It's true.
Right? It's so much there. It's such a people business.
It is. It is. And thank God. I think that's what's really helped me because I'm a very big people person. And, a lot of people in this industry get frustrated because there's so many moving parts and clients have so many questions and they just feel like, I've already been doing this for 15 years. Trust me, just don't ask me any questions. And the clients don't feel comfortable with people like that. And, I treat every client just like as if they're my only client. And, I understand, I put myself in their shoes and and I make sure that they understand the entire process because the biggest fear for a client and the number one reason why they don't pull the trigger generally is the fear of unknown. So I make sure they know everything up front so that they're comfortable because then about after they know the numbers, they know then they're comfortable and it's just about finding the home in that price range.
Right. And to some extent, it's even a must because the difference in either there's a couple starting out or a move up buyer, the difference between renting and owning is it's not a little difference. It's a massive difference.
Of course.
So
look at people renting. Their rent just went up $400-500 a month over the last couple of years.
Sure.
That's $100,000 on a mortgage.
Right. And there's no recourse. And then I have friends and family that have shoe boxes full of canceled checks.
Yep.
And no equity and no deduction. So it really, fortunately, we have those mortgage interest deduction, which, by the way, realtors have really fought to maintain that for many years on Capitol Hill. You got to give realtors credit. Even right now, they're having the NAR mid-year legislative sessions, and there are realtors banging on senators' doors today. We're just reminding them of their presence and to advocate on behalf of homeowners. And that's one reason the mortgage interest deduction maintains. And another is the capital gains exemption, where someone told me they had to pay capital gains. And I said, I feel terrible. You made $500,000. You're married. Mm-hmm. So, but imagine those things going away. They've both been threatened.
Yeah, they are, and you'll never see more realtors door knock than when that happens. So they'll be knocking on all those politicians' doors, making sure that they don't do that. And honestly, in my opinion, it would be very foolish of them because the more advantages you take away from owning a home, the less sexy it is, the less attractive it is, and the less people that own homes, less taxes, and the less people that own homes, then they don't really care about the neighborhood so much, which means crime rates go up. It'll be a snowball effect that will just basically affect everybody, including the people that are writing the laws.
Yeah, you're absolutely right. It affects everyone, and that's that's a lot of families. Really only way to accumulate any wealth is through the transfer and the ownership of property.
Yeah.
So, look,
generational.
It's generational. Well, you and I are part of this proud industry, I think, and being on all sides of lending or brokering or just being part of it and observing. I know that people really cherish the relations that come from the familiarity, and you are powerfully contributing to each other's success. And that's what I really love about it.
Yeah. It's all a teamwork. You have to be involved, and both of you need, like when my agent puts in an offer, I don't just sit back and wait for the seller or the listing agent to call me. I literally pick up the phone. I call the listing agent and say, hey, I just want to let you know, Scott put in the offer. I already reviewed the client's documents, tax returns, W-2s. Maybe we already submitted with a DU approval, but, or let's just say we didn't in this situation. And I would just explain to them everything. Just last week, I was on the phone with a listing agent. And after speaking with them, my realtor got a text message and she sent me, her name is Jasmine. She sent me a text saying, forwarding me the text message the listing agent sent them. And the text message said, I took your offer out of the pack. I'll give you a call in 20 minutes. And that was because I called them and I explained to them how qualified the buyers are and how quickly I could close. And they were just delighted to hear from me. And we ended up making a deal.
And that's what they want to hear. But I'll tell you, maybe, I know you're an old timer. It wasn't that case not too long ago where they wanted to, you stay on your side, I stay on my side. There was no way to talk.
Yeah.
People used to be that there was this wall that you couldn't, and that's totally not true now.
No, actually listing agents love when I call them and I tell them, just like I told this agent, Don't call Jasmine when you need an update. You're going to call her so she can call me so I can give her the answer so she can call you. Just send me a text. It's fine. We're all on one team. I know you represent the seller. I represent the buyer. But at the end of the day, we have the same goal. And they love to
Absolutely.
hear that because the transparency for them means something. And they represent the seller and they have to get back to the seller. So if I make their process a tough process, then they look bad to their client. And now that hurts their referral base in the future.
Yeah. Well, I
So,
mean,
yeah.
you have such a command of the industry, and I should say the local, industry. You really do. I've admired that about you. It really is important, and it is a team. You have 5 players, really. It's like a basketball team. You have obviously New York, your lawyer, your lender, your realtor, home inspector, insurance company, title company, and then the mover in the state. You have you have 5 or 6 people that have to be comfortable and maybe even like each other and want to continue relations.
They have to. I work with agents that just honestly they work with me because they hated their last loan officer and they gave me a shot because they were just having such a bad experience with them, and it just so happened maybe I'd even offer them anything better. Maybe I was offering the same type of rates, just but they chose to work with me because we enjoy. I mean, I have a couple of agents I work with. I've been working with the sister for so long. She never introduced me to the sister because she never wanted to in case she knows her sister's very tough, and which she's probably going to watch this, and so I won't say the name, but what's it called? But after dealing with her for so many years, a couple of years, she ended up introducing me, and then we're just like one happy family, honestly, and it's nice because people know that when they refer me out to somebody, they know I'm not going to embarrass them. They know I'm going to put my best foot forward, and they know I'm going to get the job done, which is just as important. But at the same time, I'm going to do it at the right price, at the right service, at the right fees, right rates. And then, God willing, I always tell my clients, it's on every email that I always send. One of the greatest compliments I could receive is a recommendation from your friend, coworkers, or loved one. Thanks for the trust and continued business. Because it's, I always say the same thing. I don't care about the deal. The deal itself means nothing to me. The deal's going to close if you hate me or you love me. It doesn't really matter. But after the deal closes, what I really want to last is that relationship. So I'm going to do everything in my power to make sure that you get everything you want, because after that deal closes, I want to make sure that that I did everything the right way so that they can refer their friends and family to me.
Absolutely, and it works to their benefit because if someone sees your name on an offer, there's a trend now where an offer is not just $1, it's not just a down payment, it's who are you working with, down to the home inspector. We don't need crazy lawyers and crazy bankers and crazy home inspectors. And I've told someone, whoa, don't even think about a big box store of Citibank or Wells Fargo. If you want a problem, go there. I cannot text David. I cannot text Wells Fargo. I could text David. I could text a lawyer at 9 o'clock on a Friday night, and I've known him, and you better answer. And if not, tomorrow morning at
someone else will answer.
Right.
And so that's why I always say, answer the damn phone, because if you don't, someone else will.
Yeah. I was surprised that it still happens when lenders don't answer. And when I got in this in 96 with a fat, I forgot the name, like a Motorola phone, a huge thing. It wasn't the battery.
StarTAC.
No, the StarTAC was the next generation. I would love those. Oh. The Razor. This was the big one. It was like the one for what the hell? It was before Sprint. Nextel.
Oh, Nextel. Yeah. The
Choo-choo. I had that. I loved it. I did that from Hawaii once.
I had that also. It was great.
I loved it. And a guy that's
the walkie-talkie phone.
He said, let's start doing some closings. And he goes, the most important thing you'll have is that flip phone. I didn't know the smartphones would ever be. And he goes, that phone, you answer it, you will have a career. If you don't answer it, you won't. And
I agree on that.
Crazy, but he's right.
He's right. Listen, the last thing I'm going to do when I'm done with my career is sell my cell phone number, because you can't retire until you give up your number. And I came up with that because someone came over to me and offered me a lot of money for it. But it also came with a non-compete for a couple of years, so it didn't make any sense.
But what good would it do then?
My phone number?
Yeah, it's not you anymore.
But it rings 50 times, 100 times a day sometimes.
I know, but if they're getting a stranger, what is he going to say? Hi, this is
Oh,
David.
David, this is, I work with David, and yeah, I don't know. He would say something. I'm not gonna say, whatever. But
Oh,
yeah,
okay.
if I was him, I would figure it out.
Mhm.
If David's busy, he gave me his phone. Just I'll reach out to you. I work with him now. What
Oh,
can I
great.
do
That's
for you?
good. That's good. All right,
Yeah,
that's auction
I
then.
always figure it. Yeah, but yeah, that's the market's crazy. Everything's crazy, but God willing, one thing about it is the strong always survive, and the people that do things the right way and do things the way that it should be always come out on top. No matter what market you're in, because there's always a business, and it's just a matter of if you're gonna get it or not.
Yeah. Right. And the best way to take care of people and make them feel valuable and be that trusted advisor and that resource.
Yeah,
Well,
I agree.
David, I want to tell you, we are here for the year. We are here with your selected audience, your agents that are going to co-host and give interviews and provide value to the local business community. So what's the best number and best way to reach you via email or website?
Yeah, I mean, everyone can reach me on my cell. That's the best number, 917-597-0870, or my email, which is dmizrahi, which is a little bit tough. So DMIZRAHI @fmm.com.